Are you looking to grow your wealth by riding the wave of cutting-edge technology? Or maybe you're wondering, is it time to invest in AI stocks like Nvidia or Dell? If you've ever asked yourself questions like these, you're in the right place. AI is no longer a futuristic dream. It's happening now, transforming industries and creating massive opportunities for investors. But how can you take advantage of this revolution in a way that aligns with your financial goals? This year has proven to be a remarkable one for artificial intelligence, AI stocks. As businesses leverage this rapidly advancing technology, companies involved in AI have experienced significant improvements, boosting their share prices. But what does that mean for you as an investor? The exciting part? AI is still in its early stages, and as the demand for this cutting-edge technology continues to grow, spending on AI is expected to skyrocket. In fact, according to market research firm IDC, global AI spending is forecast to surge from an estimated $235 billion this year to $337 billion next year. That's an increase of nearly 50%. So, how can investors take advantage of this explosive growth in AI spending? Let's dive in and take a closer look at two companies that are not only playing key roles in accelerating the adoption of AI, but have also seen remarkable growth thanks to this technology. Are you ready to explore the opportunities? First on our list is Taiwan Semiconductor Manufacturing Company, ticker TSM. Taiwan Semiconductor Manufacturing Company, or TSMC, is the largest semiconductor foundry in the world. It manufactures chips for a variety of high-profile chip designers, including Nvidia, Micron Technology, Marvell, Broadcom, Advanced Micro Devices, AMD, and Qualcomm, to name a few. But why is TSMC so important to the growth of AI? In addition to these clients, TSMC also produces chips for major consumer electronics companies like Apple and Sony. Pretty impressive, right? As AI adoption grows, these companies are increasingly demanding chips capable of supporting AI applications, particularly in the field of generative AI. TSMC, which has been a key player in producing chips for data centers, is well positioned to meet this rising demand. Market research firm Gartner predicts a 14% increase in semiconductor revenue next year, driven by strong demand for graphics processing units, GPUs, and memory chips, some of which are designed and sold by TSMC's customers. Isn't that exciting for an investor looking to profit from the AI boom? To break it down even further, AI GPU revenue is projected to increase by 27% next year, while demand for high bandwidth memory, HBM, which is essential for AI chips, could surge by as much as 70%. And it doesn't stop there. AI is also making its way into consumer electronics, with AI-enabled smartphones and personal computers seeing explosive growth. For example, Apple and Qualcomm are benefiting from the proliferation of AI features in smartphones, while AMD has seen rising demand for central processing units, CPUs, that power AI-enabled PCs. Could this be the next big investment trend? IDC projects that shipments of AI-capable smartphones could increase by 73% next year, while shipments of AI-enabled PCs could jump by an eye-popping 165%. This represents a huge growth opportunity for TSMC as its customers ramp up production to meet the rising demand for AI chips. Are you starting to see the potential here? In fact, TSMC has already seen impressive growth in 2024. Over the first 11 months of the year, the company's revenue has grown by 32% compared to the same period last year. More recently, in November, TSMC's revenue growth accelerated to 34% year over year, up from 29% in October. This suggests that TSMC is heading into 2025 with strong momentum. Do you think the growth is going to slow down? It doesn't look like it. Given this robust demand, TSMC is expected to experience solid revenue growth of 25% in 2025, and analysts predict the company's earnings will rise by the same amount. With an attractive valuation of just 22 times forward earnings, TSMC is trading at a discount compared to the NASDAQ 100 index's forward earnings multiple of 28, which makes this stock an enticing prospect for investors. Does that sound like a great deal to you? In fact, analysts are so bullish on TSMC's prospects that the stock has a 12-month price target of $240, which represents a potential 25% upside from current levels. However, given TSMC's critical role in the global semiconductor market, it wouldn't be surprising to see this stock outperform even these optimistic expectations. If you're looking to add a strong semiconductor stock to your portfolio, TSMC certainly deserves your attention. Isn't it time to consider adding TSMC to your investment strategy? But before we dive into Dell, here's a question for you. Do you think the chip shortage is over? Or is the stock market just getting started with its tech surge? Comment your thoughts below. I'd love to hear your take. Finally, we have Dell Technologies, ticker Dell. Dell Technologies, a well-known name in the tech world, has recently made headlines for all the wrong reasons. The company's stock took a hit after releasing its fiscal 2025 third quarter results in late November, which showed revenue falling short of Wall Street's expectations. But could this setback actually be an opportunity for investors? The drop in share price might have left many investors concerned. But for those who are savvy and patient, this could represent an opportunity to buy Dell shares at an attractive valuation. Currently, Dell's stock is trading at just 21.6 times trailing earnings, and its forward earnings multiple of 12.5 is even more appealing. If you're an investor looking to capitalize on the AI boom, Dell's stock pullback could provide an ideal entry point. Does that seem like a smart move? So, what exactly makes Dell an AI stock worth watching? For starters, the company stands to benefit from the booming demand for AI servers. The AI server market is expected to grow by a staggering 55% in 2025, generating an estimated $252 billion in revenue, according to Bloomberg. Dell is already a significant player in this fast-growing market, and the company's performance in its most recent quarter highlights just how well-positioned it is to capitalize on this trend. Can you see the potential for growth here? In fact, Dell's revenue from its Infrastructure Solutions Group, ISG, increased by 34% year over year, hitting $11.4 billion. Within that, the company's revenue from servers and networking equipment saw an even bigger jump of 58%, totaling $7.4 billion. Dell also made impressive strides in the AI server segment, selling $2.9 billion worth of AI servers in the last quarter alone, with an AI server backlog of $4.5 billion. Isn't it fascinating how much demand there is for these products? Looking ahead to 2025, Dell's ISG division should continue to experience strong growth, particularly driven by demand for AI servers. Additionally, Dell is poised to benefit from the growing market for AI-enabled PCs, which, as we've seen, is set to experience massive expansion. As the third largest PC vendor globally, Dell is well positioned to capture a substantial share of this rapidly expanding market. Could this help drive even more growth? Dell's earnings are expected to rise sharply, with estimates suggesting an increase of over 20% in fiscal 2026, assuming Dell hits $9.40 per share in earnings, and the stock trades in line with the NASDAQ 100 index's forward earnings multiple of 28, its stock price could soar to $263. That's a remarkable 125% upside from current levels. Does that sound like a solid return to you? So, if you're looking for an undervalued AI stock, Dell could be a great pick, especially considering its pullback in price. Will this be the next great investment opportunity? The table provides an overview of two leading tech companies, Taiwan Semiconductor Manufacturing and Dell Technologies, offering valuable insights into their stock performance and market position. TSMC, with a market cap of $1 billion and a current price of $195.56, is trading within a 52-week range of $98.80 to $200.60. Its impressive gross margin of 53.4% underscores its strong profitability. Meanwhile, Dell Technologies, with a market cap of $79 billion and a current price of $112.67, is showing slightly more modest margins at 21.90%, but offers a higher dividend yield of 1.51%. Both companies demonstrate solid trading volumes and consistent average volume, making them solid choices for investors seeking both growth potential and stability in the tech sector. With TSMC's robust position in semiconductors and Dell's diversified offerings in technology infrastructure, both stocks present unique opportunities depending on your investment goals. Why invest in AI stocks? Now that we've explored TSMC and Dell, let's take a step back and ask, why should investors be paying attention to AI stocks in the first place? AI is transforming industries across the board. From enhancing customer service with chatbots to revolutionizing industries like healthcare, finance, and retail, the potential applications of AI are virtually limitless. So, are you ready to invest in a sector that's set to change the world? Companies that are playing a key role in developing, producing, and deploying AI technology are poised for significant growth. But how can you capitalize on this massive growth? By investing in companies that are benefiting from the AI revolution, whether through the development of cutting-edge hardware, like TSMC, or providing AI-driven services, like Dell, investors can position themselves to take advantage of this high-growth sector. Doesn't this sound like an opportunity you don't want to miss? AI's impact is only expected to grow in the coming years, making now a potentially lucrative time to invest in stocks that stand to benefit from this trend. Are you ready to take the plunge? Overall, AI is not just a buzzword. It's a transformative technology that is reshaping industries and driving economic growth. Companies like TSMC and Dell Technologies are well positioned to thrive in this new era and represent compelling opportunities for investors looking to capitalize on the AI revolution. So, what are you waiting for? If you're looking to diversify your portfolio with high-growth stocks, it's hard to go wrong with these two names. Just remember, while the growth potential is exciting, investing always carries risks. Always do your own research and consult with a financial advisor if needed before making any investment decisions. Could this be the perfect time to add AI stocks to your portfolio? If you found this video helpful, don't forget to like it and subscribe to our channel for more content on how you can grow your net worth through smart investing. Please note that this video is for informational purposes only and is not financial advice. Are you ready to start investing? Thank you for watching, and we'll see you in the next video.